Hello, and welcome to KPMG's 10 Minutes on Tax, where we discuss a topical tax issue in no more than 10 minutes. So as the dust settles on the recent corporate tax filing deadline of 23 September, we thought it was an opportune time to consider client efficiencies in the corporation tax compliance process. My name is Stephen Keohane. I'm a tax partner in KPMG, and I'm delighted to be joined today by my colleagues Aileen Carroll, Director and Head of our Corporation Tax Compliance Specialism, and Tim Duggan, Director in our Tax, Technology and Transformation team. I suppose, firstly, Aileen, if I could ask you, what's your experience and the challenges that our clients have faced in the recent CT filing deadline?
Thanks, Stephen. I suppose the main point I'd make is how complicated it's got in the last sort of 5 or 10 years. Like, as a simple example is the length of the tax return itself. 5 years ago, the tax return was 33 pages long. In the 2020 returns just gone by, they were going up to 44 pages long, which is actually double what it was 10 years ago in 2010. For the 2021 season coming up, there's an additional 5 pages been put in, so it's up to 49 pages long now. And each one of those additional pages creates an additional layer of complexity into the tax return process. Each of those additional disclosures, they require significant additional thoughts, and what looks like might be relatively straightforward. As an example, the transfer pricing disclosure was put into the 2020 return. It's only 3 panels in the CT1, but it actually required an awful lot of thought to complete it correctly, and sometimes required expertise analysis from the transfer pricing teams. So it just goes to show extra complexity creates much more additional time in the compliance process itself.
Another example actually is the anti-hybrid rules that we've had recently, which they can be quite complex, and I suppose they'd fall outside of what our traditional compliance work would be, because they'd require a separate analysis to come to your filing position and conclusion. So I suppose the lesson there being that it's better to engage earlier and address that up front. Leave it to last minute is probably not the best approach. And I suppose maybe turn to you, Tim. We've talked there with Aileen a little bit about the increased volume and the amount of I suppose complexity, but from a data perspective, I suppose, what are the issues that you're seeing that clients face?
Yeah, thanks, Stephen. I think data's had a massive impact on the process and how efficient that is from tax returns and tax computations. And broadly, it's one of 2 things. First one is data quality. So if we think about what the tax professional is doing, using a simple example of, say, legal and professional fees, they're analysing the description there to determine whether it's allowable or disallowable for corporation tax purposes. And when they draw down that information and they look at that description, if there's no description there, or if the description is very short, in essence they have poor data quality and they can't actually do their jobs and make that tax determination. So they're generally left then with one of 2 options. They either add the cost back, which obviously is a tax cost to the business, or else they actually go and sift through the source documentation and try and find a description that they can use to make that determination, which is obviously a really inefficient use of their time and just adds to the whole process. And then the second issue where data impacts on the process, I would say, is when those new requirements that yourself and Aileen were talking about, when that data isn't actually set up to be captured within the source system. And in that instance, the tax professional then has to go to find different sources for that information and try and collate that then manually, often using tools like Excel outside of those source systems. And again, it's just an inefficient use of their time.
Maybe a logical follow-on question, I suppose, what could clients consider in terms of addressing those issues?
Yeah, great question. I think diagnosis is obviously easier than cure, but I think it is a great time to actually be looking at this, because it is fresh in people's minds. So I would urge people to possibly do a self-review of their process, look at where the bottlenecks were. What I always like to draw it down to is when they were sitting there going, there has to be a better way of doing this. They're the exact things that they need to look at doing. For my specific 2 examples, I suppose data quality, they can use data analytics to actually find out where that poor data is, and then perhaps rectify that using tweaks in the ERP system, or maybe an educational point for those people who are entering the data. And then from the second example where the systems aren't set up, I would say early engagement to try and work with their IT to actually get those tweaks put in, or if their IT aren't able to build in those new requirements, maybe they'd look at other tools rather than Excel for that manual data collection. So things like Alteryx can actually help collate that information a lot more efficiently and reduce risk. But it may be a medium-term type project, but I think it's massively worthwhile doing.
Early engagement is really the key. We've seen significant benefit with those clients who engage with us early, consider all of these things early, whether it's the data capture or whether it's the new requirements and the impact that they'll have on the tax return. So the likes of the transfer pricing that I mentioned, CFC disclosures from last year, anti-hybrids, they're all they all have a big impact on your tax return, but you need to think about them early, and where you do, there's significant benefit, because you don't want to find yourself in that pinch point in the run up to that main filing deadline in September, where you're trying to consider these really complex areas. And the other point actually that I'd add to that is these are really high risk and they're high profile. They're where revenue are going to be focusing their attention, and so we really need to get them right. And to do that, if you're considering them earlier in the process, you're much more likely to get it right, and it improves efficiency and reduces input all around. So I suppose on that early engagement point, what sort of issues do you see clients needing to face that they should be starting to think about now?
I think back, I think you mentioned it earlier, Aileen, like 49 pages for the 2021 version. I suppose maybe one or two examples. What's that incremental element there? And I suppose just to keep those maybe one or two simple examples. The accounts extracts, if you're required to fill that in, and subcontractors. Now there's the requirement to actually disclose the amount of subcontractor payments within the RCT regime, as well as the payments outside the RCT regime. And the other example I suppose that I have is the distributions made. So that now will require additional details in terms of the payee vis-a-vis their tax reference number. I suppose when you stand back and you just think about maybe those two simple examples, do you have that information readily available? Is it easily accessible and extractable from your system? And perhaps if not, do you need to think about an additional input panel perhaps at the data entry stage in your ERP system maybe?
Yeah, and actually I'd add to that as well, the new interest limitation rules, they're going to be a real problem for clients. They're proper numeric calculations. They're going to have a real impact on your tax return, real impact on your cash tax position. I suspect it's going to be quite difficult to get access to the data, so the points that Tim mentioned are going to be really relevant. And so while we do have the benefit that they're not going to come into play until 2022, now is the time that we think clients should really be starting to think about that and engaging with their advisors.
Thanks, Aileen. And thanks, Tim, as well. So it's maybe just to kind of pull that together in terms of maybe some key takeaways for clients from an efficiency perspective. I suppose there's maybe three things that come to my mind. I suppose complexity was the first thing we addressed. I suppose that additional complexity in the corporate tax compliance process can lead to a more difficult process. And I suppose the other piece was, leading on from that, was early engagement. So engaging early in that ongoing changes to the system, and then considering your system, is it fit for purpose, or have you got the right system to get the right information for those requirements? And then maybe lastly, to your point, Tim, around self-review. So performing that self-review sounds like a good idea. Assess your systems, assess your processes, identify those bottlenecks, and then try to fix or resolve those in advance of next year. So thank you to Aileen and Tim for their time today. And to you, our viewers, if there's any of the matters addressed today which are of interest to you, please do visit our website for regular updates. Please also feel free to contact either myself, Aileen or Tim, or your regular KPMG contact. Thank you.